Hey folks, and welcome to the Pipnotic Symposium for the 9th of July 2020. Today we're going to have a look at currency strength, and we're going to discuss the currency strength histogram. I know a couple of guys who are having some troubles getting the histogram to produce alarms, so let me show you a quick trick that will help force alarms, just to confirm that they're working. So what you do is you double click somewhere on the histogram, and it'll bring up the configuration window. Okay, and here you have the mean data. Okay, what I'd like you to do is I'd like you to take the modifier and move that to, for example, 1.0. That's a very low reading. And essentially, very low readings in the modifier are going to force a lot of alarms to go off. And then go here, go to the scannable periods, set this to true. Go to the enable alarm, enable for all symbols, set this to true. And then click OK, and this will run, and it's probably going to return a lot of results. And the good thing about doing it this way is that we're forcing the platform to check for very, very low histogram readings. Okay, and so this will force a lot of pairs to sound an alarm. And so try this and see if it gives you some kind of a result. If it doesn't, then there could be some missing historical data. And so I encourage you to click through the time frames as we have done in the installation video for this piece of software. This is very important. And just go to the GFX, like a GFX chart, attach that chart, and then just click through the time frames one by one. Okay, as you can see here, this nicely produced a bunch of alarms. Let me turn these off. Okay, and put this back to normal. This produced a bunch of alarms. You can see here, because most of these have been triggered, and here we have a ton of stuff. We have almost all of the currency pairs telling us that something is up. You can see here on the 1 hour chart, the 4 hour, and the daily. On the Kiwi we have distribution, and so this is this current chart here, and you can see how we're very high on the daily. On the 4 hour, probably pretty high as well. And after that, there's the 4 hour, and on the hourly, which is this one here, you can see we've reached that positive 1 variant. We go to the hourly, we'll probably see this also moving a little bit high. Okay, we've also just popped up here, so we're about at least 1 times the variant just here. And so you can see that price is kind of reaching high. We've reached these highs here, we peaked here, and now we're seeing the strength between these two currencies start to slow down. Okay, and so we can expect this is probably going to begin to wriggle lower from here. Okay, so I mean, this is a way that you can force the software to sound alarms, and just give that a shot and see if that helps. If it doesn't, then have a look at downloading the historical data once again, and if that doesn't help, then shoot me a message and I'll have to figure something out. Okay, good. Okay, we also had a talk about the supply and demand software. Okay, and so let's have a quick look at that. And this question was related to some of the settings here, where we have the risk to reward ratio and the price imbalance release period. And someone in the room was asking about these settings, and I just want to show you what this does. So currently we have some pretty liberal settings. We have a risk reward ratio of 2.0, and we have a price imbalance release period of 2. Okay, and so essentially we want price to move away 2 times the size of the area of supply or demand within 2 periods. That's what we're telling the software by fiddling with these. But if you want to really scrutinize these levels, well, then you can put this value to a little bit higher. For example, 3, so we want the risk reward to be 3, and we want this to happen within 2 periods. And you'll notice that some of these levels are going to disappear. Yeah, the one that was down here has disappeared, but this one is still standing as a strong level. If we go here, you can see that a lot of these 4 hour areas disappeared. This one is still strong and still standing. You can see that when price came down here within 2 periods, 1, 2, so when this candle closed, we traveled 3 times the size of this area of demand away. You can see we have a little one here, a big push away respected. Then we have this daily one here, which looks like this on the daily chart, just like so. Okay, and so this is just really scrutinizing these areas of supply and demand to a much higher degree. And if we look here, you can see the areas that have been tested historically. We had this one here, which was tested. That one worked out nicely. We have this one here, which was removed. We had this one here that was tested. This one here that was removed by this area of demand. We have this one here, which worked out very nicely. Had this one worked out nicely. This one worked out nicely. This one just here was tested just here. This one was tested very nice. And so you can see, I mean, the more strict the rules, the greater respect there will traditionally be for these areas. But if you have very strict levels, then you're going to be told about trades less frequent. And so you just have to be a little bit more patient. So that's what those settings are doing. Okay, so now I want to talk a little bit about the algo. There's been a little bit of talk about what's going on with the algo. And as mentioned, the algo is not for sale. It's just a tool that I'm using to help validate the currency strength histogram. Okay, this is a so this data just down here, but I am toying with this. I'm playing with this on the smaller time frames because I know a lot of the guys and gals in the room like to trade a lot shorter term, and so this is just something I wanted to spend a bit of time investigating. Okay, so what I've done here is I've changed the default settings. It's going to reset everything here to look back of 30. The mean periods is 300, the modifier is 2.5, and I'm putting that on true. And then I've been looking at the 1 minute and the 5 minute charts. And so what's been going on here is that when price is poking into these positive and negative variants on these time frames, price has typically been moving away very nicely. And if we have a look at a couple of these trades, let's have a look at this one here. Okay, this is this one here. So the Singapore dollar, Japanese yen. This was a 1 minute positive. So negative. So this is accumulation, and so it bought here, and this one has stopped out. Okay, as you can see just here. If we have a look at the next one, we have this one here. Price bought down here. This is on the 1 minute. This is a minus 2.61, and this minus 2.61 corresponds to this value here. Okay, so at the time this order was filled, it was minus 2.61, and it got out here, and it went from here, went all the way up here. So if we have a look at that trade, we were risking 5 pips, and it went 25 pips. So that was a 5-to-1 risk reward on that one. Let's have a look at this one here. Here we had a small one where we had the entry here. Price went down here, and we went. Let's see, we risked 10, and we went to the highest point. Where are we? There's about a 1-to-1 on that one. We have a look at this. Where'd that one go? Yeah, so we had a short at this area here. The stop was up here, and price all the way down here. Let's have a look. So this was 13, and it went down to about 39, so about 3-to-1 on that one. This one was stopped out. Let's have a look, and that was buying just here, which was not a very good idea, as you can see. But we have a lot of other ones that are interesting. We had this one here. There was a sell here, and we got out of the trade just here. This one has stopped out, so we sold here, and price kept on moving north. Let's have a look. We got another one here. This was a buy just here, and price, it got out just here, but price actually went. Let's see how far the stop was. We had a 3-pip stop, and price to the highest point went 23 pips. So that was an enormous one there. And we had another one here. This is franc Japanese yen, and we got in here, and the stop, I don't know, it was maybe 5 pips, and then it went down to about 25 pips. So that was another interesting one. So it's working pretty well. And if you look at the readings here, these are all kind of kicked in at around 2.5. But what you can do as well is that you can make sure that you're looking at maybe slightly different values. So if you look at the ones that are winning, we have this one, we have this one, we have this one here, 2.65, and then just kind of filter out the ones that are losing. This is 2.5, this is 2.5. mean, there are lots of different ones. Here we have 2.79, so the ones that are winning are maybe a little bit greater than the others. This one is a 2.71, got a small profit, 2.7, 3.75, that was the big one. But I've just done now, I've just run through a lot of the results, and I have concluded that if you're trading in line with the mean, which is the yellow setting just here, the yellow line, let me fatten that up so we can see it better. If you trade in line with this, okay, so if the yellow line is below the zero line, then you're selling. If it is above, then you're buying. You'll find that these trades are working out a lot better because this is averaging the currency strength histogram, and it's ensuring that if the yellow line is below the zero line, then you should be selling. And this is interesting because it's if you consider the data that is calculated and presented in the form of the histogram, it's a pretty profound piece of a selection of data. And so when the yellow line is below the zero line, well, then it's just a good idea to sell and not do much else. So I'm still playing with that. I don't have enough data to come to any conclusions, but my preliminary findings are that if you're using a 30 period look back, let's just reiterate these. We have a 30 period look back, we have max periods of 300, and we're setting the modifier at least at 2.5, and trading in line with the mean, then things normally work out pretty decent. Okay, so I would investigate that if you're keen. And this is a 1 minute and the 5 minute chart, and I'd say I have a distribution of about 50% winners, 50% losers, based on the results. But when I have a look at the losers, I could have removed a lot of those by trading in line with the mean line that you can see just here. Okay, so it's pretty fascinating, and this is a live account. I'm not doing this on a demo account. I like to make sure that that we have actual real data, and I think it's a superb investment to spend a few $100 on getting these results, because essentially it's earning a little bit of money and not losing a whole lot. So that's good. It's a very good investment, and I think the results will be pretty interesting. I'm going to keep pushing this for a little while. I'll do this until I have a sample size of about maybe 50 or 100 trades, and when I have that, well, then I'll share the results with you, so there's a little bit more data to draw some better conclusions on. Okay, good. Well, I'm going to leave it at that for the time being. If you have any questions, please drop them in the comments or the Discord channel. And once again, thanks for watching.